Well, good day, all. I'm Epstein, and here we are, and boy, it's going to be a wild one tomorrow. I'm already tired from thinking about tomorrow. And today is Wednesday. We're at the 24th of January, 2024. And like I said, I'm already thinking about tomorrow. Let me explain why before we go in here. It is a day full of news tomorrow. You're going to start off in the morning with the European Central Bank, their monetary policy. Then we get right to the jobless claims. Then we get to the economists' first look at the U.S. fourth quarter GDP. Then advanced durable goods orders. Then Chicago Federal Reserve National Activity Index. Then new home sales. And then all kinds of earnings are coming out. You saw a swift move on them today. You're seeing what's going on with the Boeing problems. Now Congress is all involved. Boeing is stopping production at this point on certain things. They're working on the problems to get through them. We've seen that the United CEO has said maybe they've got to turn temporarily and buy some of the competitors' planes. Alaska Air, the same thing. How long are these planes going to be out? How can this go on? And that just invites Congress to get involved, and they don't know what they're doing, but they'll get involved, and who knows where this ends up. As I said, it's all about earnings season right now, too. So Tesla comes out at the end of the day, and Mr. Musk is saying they're going to have less car sales. I would expect that now. He's had to lower his pricing in order to compete with the likes of BYD in China. Then they got VinFast in Vietnam coming on. In Europe, there's all kinds of pressure. And a lot of the governments, the U.S. included, on certain vehicles, they're not giving that money. All right, you've got to meet certain criteria to get that money. Stellantis today's CEO came out and said, listen, here's what we're doing. We're going to build a platform that we can put into that one platform, either an internal combustion engine, that engine with a hybrid, in other words, a battery with it, or a full battery. But what we're not going to do is have to get caught in the money cycle where we build for this EV that nobody wants right now. And he said, it's not that people don't want them as much as that. They're too expensive. To build them, he says, not me, they're about 40% more than an internal combustion engine. And at the end of the day, it's a car. And there's a certain amount of money people will pay on different segments for their cars. And the market has gone through, I'm going to repeat, I believe that part, this part. The market has gone through the newness of, hey, here's an electric vehicle. Tesla was the only game in town. It isn't. My buddy's got a Lyric, the Cadillac. It's a one. He's got both the Tesla and one. I'd rather go in that Caddy every day of the week than I would the Tesla. Now, his Tesla's 4 years old, maybe even older than that, 4 or 5 years old. But he doesn't drive much. I mean, when I tell you he doesn't drive much, I don't know if he puts on 2,000 miles a year combined on his cars. But so you go in and one's luxurious, the other is much more Spartan. You know, that's what Trump built a car for the people. Reminds me of a Volkswagen, but electric. All right, so we come to that. And I'm just looking at what's going on, and I have to share something with you. Here we are, the 24th of January. And you do remember I said I refuse to put out, I used to do it, my yearly projections as to what the market's going to do. And I never felt so stupid as I did in writing those reports for a couple of decades. And I said, this is crazy. You can't guess it at the beginning of the year. Half of these markets are random walks. Nobody knows the events that are going to happen. So this year again, they come out. How many of the different markets we're talking, if you take a look at the S&P, the Dow, where they're at? Are you up to the median projection already? You're pretty darn close, if not there. What do you want to do the rest of the 11 months? Here's what they'll do. People will take it and say, since we're here already, we're going higher. The valuations will have to go up. The market will absorb it. Okay. Do you know this reminds me? Do you ever hear of the tech bubble in the 90s? I think it was 90s, late 90s. Be careful. All right, markets have a way of pricing themselves out, and the market comes in to price them back in by taking prices down rather dramatically. The technology doesn't change. Tech didn't go away from the 90s. Do you think it went away? It didn't go away. It shook out a lot of what didn't belong there, and we became stronger, better. It's 25 years later, and boy, did we advance in all those years. Tech doesn't stop. I'm telling you, people have this stuff with AI growing to the sky. The numbers they're throwing out are insane. It takes out the idea that there'll be competition from not only domestic, abroad, and God knows where, that there'll be changes in technology. Be careful. That's all I can say. All right? I didn't say don't buy. I said be careful. I smell a melt up. You heard me, melt up. That seems to be what we're in right now. Be careful about it. The other thing you have to worry about that we've got, every day I write in my newsletter and I show the Treasury results of all these auctions and how we're continuing to pay these crazy high prices. At what point is somebody going to say, we need to raise taxes in order to stop all this and Congress has to stop spending? We're hearing the first part of that from the Republican Party, trying to fight, and if Trump gets in, that might happen. I use the word might. He says one thing and often does another, but it might happen. He wants to cut corporate taxes, and I say you need tax money to reduce the deficit. You can't do it with just holding what we're spending where we're at. It's an election year. What I just said will fall on nobody's ears. Nobody. There isn't a politician that'll pick that up if they have a brain about them. They're going to talk how they're going to spend, how they're going to make things better, the economy will grow, and it takes care of itself. Okay. When we come to DHI, no, not a surprise here. More of a follow-through, down 2.7% more today. If you looked at yesterday, you were down in the market, how much? 9.24. So the market from a new high on the move has just lost, in round figures, 12%. Okay. 10% breaks get market's attention, and you're probably going to get the attention of the market there. You can see how fast and how swift it came about. Where could you be going? Well, a couple of things. Number one, you came from down here. So you came from 100 up to 160. 130 is 50%. So that would be right into this area. Where's the Bollinger Band? You're under it. So you've had now a breakout to the downside. Let me define a breakout to the downside. It's when you close just about at the bottom of a range outside of the Bollinger Band 2 days in a row. Until the market takes out this high now, this market, from my perspective as a chartist, has a serious top in place, could be going lower. It's oversold. It won't likely stay under the Bollinger Band very long, but it can propel that. It's got traders caught. This is a market that got excessive, and that's what's taking place right now. When we take a look at CCJ, which is Cameco Corporation, which is uranium, think of it that way. You have a higher high, lower low, and flat momentum. You have a bullish bias in the market, but it hasn't really done anything. It's not sexy. It's not in tech. It isn't in NVIDIA. It's nothing like that. That is the problem with the market. Now, I'd be very careful in gasoline prices right here. One of the reasons we're up today is China. China comes out, changes. Yesterday it was they told their stock regulator to call in money from abroad and start buying stocks. So they're going to window dress how bad their stock market is, which is down 10% for the year. And today they realize that's not enough because guys like me are saying it's just window dressing. That doesn't change the fundamentals. So to change the fundamentals, they did a move today. Now you got to be concerned. They lower the bank reserve ratios by 0.5 percentage point. That frees up a lot of cash. And as that cash gets dispersed, that could spur on the economy. So everything with energy gets a bid on a day like this off of it. Copper, iron ore. Just think the commodities that they go through. So here you are. We're up in the gasoline. It's a little strange in the U.S. that the gasoline is up at this time of the year. How many of you are going on cross-country drives? It's January 24th. My point. XLF. You're sitting here running the upper Bollinger Band and you're overbought. I'll let somebody else want to own that. I think the pros came out right here 2 days ago and I'll let the other guys want to own it at that point. In the industrial sector, every time I look at a set of how manufacturing is doing in America, it's terrible. And the market has come up. I don't get it. The chart doesn't either. You don't have a trend here. You have a lower and low, higher high. I'll let somebody else want to play that one. AMC, they got to be doing, if you will, the cringing in their corporate offices, looking at how fabulous Netflix has done, how they added as many subscribers as they did during the pandemic in a quarter. Just think about what this all means. The pricing power, the deal now with WWE, and God knows what else they're going to do. They're in a great position. So they are the equivalent today of a NVIDIA to the chipset and the AI. That's where Netflix is at this point in time. They're running on every cylinder. They're a Bugatti. They're down the road, and everybody else is going to try to catch them. They're going to be hard to catch. I'm not saying they'll do everything right, but that's what's going on at the expense of movie theaters, where they don't have anything to do it. The movie theater doesn't have any money to create more movies. At best, they're getting 130 some odd movies a year, whereas Netflix is bringing on 400 and something movies a year, not including now with all this money, they can license more. So there's a lot going on that hurts going to the movie theaters. They got to shrink further. That's my opinion. RSPD, as I look at the market, going to fight a big battle here for the consumer at the 18-day average. Get over 2 days ago's high, this 46.90. I said this to you yesterday, and you open the door up for the upper Bollinger Band. Don't, you could easily fall back down here. And obviously, the next couple of days are going to be just super, super, super important. There's so much economic data coming at you right now. Then we get to the home builders. Well, I just showed you Horton. Come on. They're going to be under pressure. Are they going to fall apart? Absolutely not. Are they going to get bids down the road? They should, as long as interest rates don't go soaring again. If they do, they get hurt. All right, they've proven they know how to buy things down. Horton's story, if you saw the earnings call and you listen to what it is, they have to reduce size of homes. They got to find things a better way in pricing. Got to make a little less money with what their models were calling for. But buying down and finding a way to buy down with the buyer of that new home mortgage rate so that it's more attractive, that is very important. And that would go away if mortgage rates fell to 6%. They're not there yet. On the energy sector, well, I explained China. You just lost your bearish embedded reading. I wouldn't be surprised you get to the 18-day average. So price in that number, remember, that'll change when you open in the morning, but that's where I'm expecting this market to go right now. In GLD, the market doesn't like gold. The market's not seeing a reason to own it. We don't have any wars going on. Let's see, the U.S. and Somalia attacked yesterday. We just attacked in Iraq again. We're attacking in Yemen. We have a Red Sea event going. We have Gaza going on. Oh, I forgot. Isn't there a country called Ukraine that we're all involved in some manner or other? The good news, as you know, and it is very good news, is that Sweden has been able to get Turkey to approve their NATO bid. Now it's up to Hungary. And come on, Orban, Mr. Orban, give them what they want. Everybody benefits from them being in it, except your buddy Putin. And obviously you're trying to help him, but we all see it. In SLV, the market fighting its battle at key moving averages. So you had the rally. Most of the industrial metals went up today because of the bank reserve numbers that China did by cutting that, but it couldn't really hold on. That's bothersome to me. The market had its bounce. It doesn't have to go any further. It could be in trouble right here. And copper's at a spot where it's got trouble. Notice how it stopped at what I call the line in the sand. Remember what we do? We put on that 18-day average. When you're rallying, you often go to it and you stall out, and the market tries to figure out what to do next. You may not agree with me, but that's basically what happened. Why did it stop there? BND coming down again. That's not a sign of lower rates. That's a sign of higher rates, just the opposite, which tells me still that all these people that still keep thinking the Fed in March is going, I don't know what they're smoking. You need the data to show that. Now, maybe all this data tomorrow suddenly starts weakening, and if you can do that and you keep this going through the month of February, I will join their parade. I'll start smoking with them. But until that happens, I think I'll stay back and have my wine and just enjoy what I'm seeing out there and save that smoke for when it's deserved. In the dollar index, we're faltering. And if you get this market to close, it closed 81.24, but if it closes under 79, you're probably going back and just stuck in this range here. The big break happened. And it's just a boring market right now. And in the euro, well, you go in tomorrow and see what the reaction to what Miss Lagarde does. The smart money's out of this market, in my opinion. I don't see them in this. I think they want to be sidelined and see what happens and then take a fresh look at the market tomorrow. So that's where I'm seeing all this comes in. Now, I know there's a number of you that like the chart action that I show here. You can make your charts do the same. Some of you use TradingView. I don't know if you're aware of it. We put 6 indicators into TradingView as a suite that we turn on from our website for you. You go to iraepstein.com and our client resources. You'll see TradingView. Give it a click. We turn it on within hours. If you do it at night, it's going to be the next business morning. But if you do it in the business day, we normally catch it and we take care of it for you. But you can see all these different features are there. You're going to get the same thing I do. If you use my charting software, it's built in, but people like their own charting software. And I don't have licensing agreements with everybody, and that's how it works. I'm not giving the stuff I've worked on for years free away. You can count on that. So if you're interested, you go to iraepstein.com. Under TradingView, you can just sign up right there. We'll take care of it for you. You can move your cursor to the top here. I'm going to get a good night's sleep, a good drink, and you got to strap in tomorrow. It's going to be a lot of information first thing in the morning. Should get very interesting by 10 o'clock in the morning. That's Central Time. Take care.